Good morning, everybody. Happy Friday. We'll get started here in about 6 minutes. All right. I'm gonna make a few more adjustments here. Um, so let's see what we've got going on here. I'm gonna post up here the prep and get into the jamming mode here. Some Aerosmith. Nice way to start off Friday, huh? Go, go. Type of a gap are we getting on the ETF today? Sorry, I'm just rocking out this morning. It's gonna be a great day, but we gotta be a little patient here at the open. For 2 minutes. I think we're pretty good to go. So I'm gonna get that over there to you. and they're just playing good songs one after another. But time to get going here. The oyster call. Happy Friday, everybody. A little cold here in Arizona today and smoky. Yeah, we're getting a lot of that smoke from California and those things going on. Man, I could not even comprehend if didn't have a computer, didn't have anything to work with, or heart goes out to those folks. So please keep them in mind. There's a lot of crazy stuff happening around the world, especially in the US, as we approach the inauguration. There's a lot of stuff that just doesn't feel quite right. Okay. But our job is to make money today. We're at just about, I think we're about 5 days away before the bulk of the earnings season starts to come into play. Okay. We really need to pay attention to Apple, pay attention to NVIDIA, and some of the other I made a large made a large market cap watch list, and this is what moves the Nasdaq and the S&P futures. Okay, stocks move first, then the futures adjust. Okay, we have to remember that. If you're just staring at a equity index chart, it's kind of like walking into a crosswalk with just side blinders on, and all you see is the walk sign, and you're not paying attention to the traffic. Okay, please keep that in mind, that the stocks move first. Okay, now I went through and started with 60-minute chart. Actually, started with higher time frame and worked our way down into and just monitoring this on a 60-minute chart because I want to stay in some of the longer trends. NVIDIA is gapping down into demand. Apple is right on top of a big pocket of points. Okay. Now, the last couple of days, we have seen that these at that Apple and NVIDIA have been really a big piece of this information as far as markets going up, markets going down, or sideways. Okay. Now I do monitor the all of them when I'm in a trade. Okay. And right now we should be seeing the pre-market indicator, the NASDAQ pre-market indicator. Notice how it's not gapping down a whole lot. Okay. Not gapping down a whole lot. We are not seeing a lot of buying come into market yet. And we look at these, there is some big discrepancies up here. Okay. Ooh. The 2-year just hit a supply, and we still have a little bit further to go on the dollar. Okay. Now, what we've observed over the last few weeks here, especially going through the holidays and things, that the dollar, 10-year, 2-year, they do impact the markets. Okay. Now, with the 10-year and the 2-year going up and the dollar going up, generally the others go down. Bonds go down, notes go down, FX markets go down. Okay. So we want to monitor these because as the dollar is approaching a supply zone, okay, it doesn't have anything in the way to get there. I mean, we got a large pocket of points that we're filling right now, and let's just take a quick look at that. Okay, there's our pocket of points from the large time frame, and we have a zone that was formed in November of 2022. So this is going back a ways. Okay, now there's a lot of stuff going on to keep the dollar as a reserve currency, or so that manipulation of the dollar is impacting how other products are trading. because there are some that are weighted against the dollar, like a lot of our FX products, okay? Yep, looks like they're selling into this. We got the trend just dropping lower, okay? And the VIX is getting higher. So there's a little fear coming into the market. And we're going to constantly monitor that today, okay? Hey, I'd like to say hi to everybody that's joining us in our live stream, especially past students. So happy that you're here, okay? Got a lot to share with you and a lot to look at, and hopefully we'll get some good trades for you to make some money here. Dendy's here. Oh, wow. Hi, Dendy. Dendy's another one of our past students and facilitators from our Indonesia area. Glad to have you here. All right. What I'm watching for over here on this, the NASDAQ here, is not a breakout to the upside, okay? Now, we may get a little breakout, okay? But this particular chart pattern, the way it's set up, is drop in its base and potential drop, okay? Now, notice we have a low pivot point. I'm going to cancel that one out there. And we have 3 touches on the left-hand side, okay? So what this picture generally unfolds like, okay, is the drop. We have price moving up. And if we get our 3 touches close to the drop area, okay, and this is recognizing chart patterns, okay, for a drop-based drop scenario. Now, look, the stocks are not moving up yet, okay? So as the stocks are not moving up, we have to anticipate that, you know, everybody wants a bounce, everybody's thinking things are on sale, okay? But what generally occurs is a price pattern that goes deep, okay? Now, I will say that this one here, this particular price pattern does go deeper, and it is in front of what we often see as a V-shaped reversal and head and shoulders patterns, inverse head and shoulders, okay? So, excuse me, understanding the structures and the patterns, okay? It looks really tempting because there's a nice pocket of point. There's no obstacles here, back to the upside, okay? But what we are going to anticipate, okay, is price getting that little pop-up. Yeah, we'll get that one there. And then we're going to look for a good move down, okay? So this is on the NQ. So let it do its little breakout. You're not going to miss anything, okay? And then look for the pullback. Now on the other side of this little larger time frame, and as we come in and look at all of the indexes, now this has not been happening for the last couple of weeks, okay? Over the holiday season, we have not seen all of the indexes looking basically the same, okay? So there is a big rotation going on. There's a big, you know, this is major players coming into the market here if everything's doing the same thing. Now, we want these things to be lined up. Let's get back to the NQ. Okay. And looking around, we're still seeing everything down. All right, so I'm going to come down to the small time frame on the NQ, and I am going to anticipate these markets going to come down. Now, keep in mind, even though the candles look small, the risk is pretty highly elevated. And I do want to point out that I noticed this morning, look how thinly traded this is, okay? There's going to be a lot of whipsaw, okay? So I'm going to stick with the micros, okay? Just 2 or 3 micros. I got 3 right now, okay? Now, I'm going to anticipate price coming back down, so I'm going to come in just a little bit lower than that resistance level at 21,147. Okay, and I'm going to wait. Okay, if price comes up a little bit higher, that's great. I can move up my entry to that 2155, depending on how aggressive you want to be. Okay, 55.80. So I'm going to come right there at, I'll just use a round number of 56. Okay, now once filled, I'm going to come back in and place a protective stop. You got to give it a little wiggle room. Okay, it's going to be approximately about let's see, if we get filled at 56, I'll keep my stop loss. It's going to be just above that, right about that 190, 194 area. Okay. Now you're going, wow, that's a really big stop. I get it. Okay. But these are pretty volatile times. Now, with the other things that are coming out today, we want to anticipate that that risk we're taking is going to provide us a nice trade. And we're looking for that particular pattern. Notice this move up and where we have a opposing demand zone. Okay, so I'm going to take my Fibonacci measurements and just use what we have right now. And I'm going to look for the V-shaped reversal, which often happens with this particular price pattern. So I'm going to use the extensions 224, 2618, 314. Okay. Now, what I'm going to do with this kind of reverse engineer, it's like, well, wait a minute, my zone is down here. Okay. This is our leg base zone. Okay. So how far up should price go to get that extension line lined up? Okay, this will kind of give us an idea that, all right, well, if I move up, we got that 21,195, things line up. Okay. Now, why I'm doing that, okay, is so that I can anticipate how to stay in the trade a little bit longer and what wiggle room I should give it. Okay. Look, with 3 micros, look, we're already seeing that flexibility right there. Okay. It's still a lot to risk. All right. So let's come back up here. And looks like I'm going to chase my stop. Okay. So we're going to put our stop at 21,195.
Order filled.
Okay. And that's what we're going to work with. Okay. Now, if I am stopped out of this, I will come back in at the break of 2155. Okay. Right now, we have to manage our risk. Okay. I mean, people are a little bit confused. Everybody wants to trade the market right now because of the volatility that we've seen. Okay. So we're going to continue with this perspective. Let's jump over to S&P. Okay, S&P jumped into a leg base zone, but not a prep screen zone. A prep screen zone is still down about 58.59 area to 58.20. Okay. Now, this particular price pattern that we are looking at, okay, and I'm going to use as a potential map here. Okay, notice the sideways choppy action over here. Okay, let's get the right tool. Price came down, and chart patterns have a lot to do with how we interpret taking a trade. It's our emotions. Okay. Notice the 3 touches on the left, just as we're talking about there. Okay. And it's making a low pivot point on the right. Okay. Now, these particular price patterns often have a move up. They break out just a little bit, and then they come back down and make that double bottom. See what we're doing here with recognizing the chart patterns, using a qualified resistance or support area. Okay, we're going to anticipate what that price pattern is going to do for us. Now, this is all covered in our Mastering the Charge Part 2, okay? If you have not used or studied the Mastering the Charge Part 1 course, it's now time to step up and say, well, why are you picking that little range? Why did you get 60-30, 60-45? What's so special about that? That's where we have the leftover unfilled orders, okay? So S&P, or big time frame, we're still looking for price to come down. We're looking for that drop base drop potential. If price starts going up from this area, then we will anticipate that breakout and then a deep pullback, okay? Now, to splice in or merge into a trade, we definitely need to go to a smaller tick chart, okay? All right, bringing up the Dow. Dow came right down. And see, this is why we look for the leg base. Now, with the reaction and with the light volume and the volatility that we were expecting from the pre-market, or just as the market started opening, okay, I didn't jump in the trade right away because this non-farm payroll can impact and just kind of keep running, okay? So a lot of times as traders, we pick great levels, great zones, great entries, but we fail to step into the trade, okay? Now, there's nothing wrong with that. That is part of the learning process. Sooner you keep documenting a lot of this information, you will become more able to take those trades with a great level of confidence. Okay. Now, right now, we're just kind of watching how things are setting up in the pre-market. Let's go back to Dow. All right. I do want to also make
Order
everybody
filled.
aware,
Order filled.
okay? I want to make everybody aware that this area that we're about ready to go into is what we call the dead space. Okay. So in between resistance, qualified support, okay, is where we had all the filled orders. Okay, orders that have been filled. Now, price can easily go through this area. Okay, this is why I had the protective stop loss on there. Let's come back. I did get stopped out of the NQ. And I'm going to set that trade back up at 21,155 or 156. And I'll take that short again. Okay. Now we're getting in a little bit early as the market is shuffling around. Okay. IBM and Apple and Nvidia are now the two largest market cap weighted stocks. The S&P, the Dow, and the NASDAQ have all been rebalanced about 5-6 weeks ago. As that rebalancing came into play, the indexes started lining up again. And Apple and Nvidia, being the two largest market cap weighted stocks, moved these indexes more than the smaller market cap. Okay. So Apple and Nvidia, along with the other 6 stocks that are the largest market cap weighted stocks on the NASDAQ and the S&P, okay, and those are market cap weighted indexes. The Dow is a price weighted index, okay? So we'll keep an eye on that. I gotta get my trade set up over here. Selling short, 21.55. Stop market. I'm just gonna stick with 1 mini. Actually, I should probably go with 2 so I can let one run. All right, so 21,155. Okay. Now, this should give us a nice run down to demand. along with the S&P having the same general picture. That's why we start off with resistance and support. Okay, now we do qualify our resistance and support areas because this is where there were unfilled sell orders. Okay, there were sellers pushing price down here and the buyers are pushing price up, but the structure overall often leads to a drop. Okay, now what I expect as well today is, since we are in a down market, okay, or a down potential down market, sell off in the pre-market here, is one of the things to expect is watching the news, because earnings season is about ready to start. They're going to start pushing out that news that may be negative for stocks. Okay. So we need to monitor those stocks, especially the top large market cap weighted stocks, be monitoring the news on that. Okay. All right, so I'm also going to set up the S&P. I'm going to use, I'll just stick with 3 micros for today. Okay, and 59.12, selling short, and I'll place my stop loss at whatever that pivot high becomes. Okay. Now, remember, we're working off of a chart pattern right now that we often see when we make a qualified buy territory. Okay. And with this particular pattern, after a drop in price and the basing, it often continues to move lower, creating V-shaped reversals or inverse head and shoulders. For the larger time frame folks out there, this is nothing more than a drop, a base, and a potential drop. Okay. All right, let me get that S&P set up. I do recommend just staying with the micros so that you can sit through the volatility, because it will be volatile. And where are we going to come in there? We're going to come in right about 59.12. And then we'll place our stop loss once that order is in play. Okay. All right. Now, crude oil, bull trap right now. Okay. Price is, let's see, where's that one right there? That was 77.06. Okay, that was our Globex range. And now we're at the pit open. Okay. Big move up, 5.6% move up on crude oil, and another massive move, 8% move up on natural gas. Okay. Now, all of this is probably being manipulated because of the additional very cold weather coming through the Midwest and East Coast. Okay. 906. Okay. Now, nat gas, I don't think has any supply zones until we get up a little bit higher. Okay. But we are looking for
Order
prices.
filled.
We get into the NQ. And back into NQ. Keep with the micros. We are 6 minutes away from market open. Stop loss, 199. Okay. All right. So crude oil, we are in a daily large time frame supply. We're just waiting for a little heads up with heating oil that it's going to pull back. Okay. If you want to set this up ahead of time, you can take a number 3 or a confirmation entry at 77.26. Okay.
Order filled.
77.26. Okay. Where we could take that if it starts to come back down. I mean, this is a pretty substantial move. Anytime indexes or markets are up this amount, this percentage, it's need to pay close attention to that. Hold on one second. I've got a couple of trades that I'm looking at. I just need to. Not too big of a size on one of my positions that I was looking at taking. Okay. So I needed to resize it. All right. All right, let's move on. Gold had a significant move and it's still continuing to go up. Keep in mind that gold, if it starts back down, this whole area is used up. Okay. Now, looking over to the left-hand side of the chart, there's very few obstacles. Right now, we're in the middle of that pocket of points. Okay. So heading back up to all-time highs. Now with gold and the metals moving up like this, along with crude oil, natural gas, something's not quite right. Okay. And what I mean by that is, are we seeing a move back up on the bonds and notes? No, we're not. Okay. We're not even seeing a very big move back up on the FX. Well, a couple of them have gotten a little bounce here. Okay. Copper heading right towards the that supply area. That supply zone, make sure you verify it. Okay. It's just for a short term counter trend trade. Swiss franc getting a bounce, British pound. Okay. So we're going to watch how the session opens. About ready to trigger on the S&P. Stop loss in place. Make sure I get that on both accounts. Chin. Oh, wait, I'm not in this one yet. All right, we're about 2 minutes away from the market open. We have a trade set up on the S&P. If you choose to take this to the upside, you do have some potential, okay? But you missed the breakout. You got to wait for price to come back down to demand, okay? The big thing that we use is a breakout trade, okay? Based on the structure of the chart, I chose to not take the breakout trade, okay? Question? Okay. Markets are just about to open. They need to come back in. Okay. Now, taking this to the upside, okay, is still an option. There's not many obstacles, okay? You've got a dead space area. So if price does start getting back into that dead space, it should easily go through that area, okay? Okay, we're still in that one. All right, so we're gonna monitor the stocks. Wow, Meta actually opened positive. Okay. An important lesson that we are
Order filled.
watching, okay? Make sure you have your stops in place. Things are gonna get whipsaw and volatile. All right, let's go green, go green. And this is becoming one of my more favorite chart patterns to participate in, okay? They just have that momentum. I mean, the V shape or the big drop is important here. All right, let me clean these up here just a little bit. And I'm noticing my data slowing down just a little bit here because of all the folks in there. So I'm gonna save all workspaces and I'm gonna stop sharing the video for right now. Okay. That usually frees up a little bit. I started setting up a new computer. Got the monitors up there and we'll get that one going. I actually bought a mini computer, which is a little box. I mean, you should see them, okay? And they're about half the price with all the muscle that you would with one of those big towers. Now, keep in mind, if you're feeling uncomfortable while you're in a trade or you just hit that dollar amount that makes you feel good, it's okay to take that, okay? It's okay to take the money. You don't feel that you have to stay in the trade. Most of us have some daily goals of what we're trying to accomplish. Okay. And if you can get anywhere from $200 to $500 a day off of and using the prop accounts too, okay, then that turns out to be a nice little income. All right. So I want to be prepared to flip this around if it's not going to go in my direction. Okay. And I'm going to honor where my stop loss is at. Stocks are starting to show a little mix. We got Meta and Tesla bouncing up, but not much going on from Apple and Nvidia at the moment. Okay. Remember, these are the two that we need to really give a little more weight to. So if you're going to do a weighted moving average or uh, a weighted, it'd be kind of a weighted average of all of them. I would put more weight on Apple and Nvidia, kind of like the weighted moving average, where they put more weight on the front half or the back half of the specified number. Okay. Notice Apple, Nvidia are pushing lower. Okay. There we go. Now we did have let's go take a quick look at that. We got to determine, you need to determine, and I'm working on some very specific rules around a runaway gap versus a breakaway gap, okay? And we have to have those very specific rules in place to help us understand when to stay in trades longer, okay? As I'm looking at the cues here, I noticed that price consolidated sideways and then gap, okay? Now this is associated, the sideways action is associated with a runaway or measuring gap. I mean, we're not going to get price to bounce back up into the zone. It's going to keep on going in that direction, okay? Now, it doesn't always just go really fast, like, I would like it to, but understanding the different types of gaps on the exchange traded funds will help you stay in a trade and anticipate the trade direction a little bit better, okay? All right, how we doing with crude oil? Yep, we're not in that. Heating oil finally getting a red candle. And I do have an opportunity, a place where I want to sell short. Globex range is very wide, twice as wide compared to the daily ATR. This is why we're looking for the bull trap as price comes back up into that supply zone. Now, the range that I have marked is from like a 480-minute chart, a larger time frame. You can take that same range and break it down and see if there's an opportunity inside of that, okay? Or another leg base that might be smaller. I have not done that at the moment. All right, nat gas, okay? Keep in mind, as we watch nat gas in the pre-market, okay? Pit open 9 a.m. Eastern. 2 hours before is where the big boys come in and start setting up their day. So these two pivot points, a high and low of that range in there, okay, gives me a little bit of a clue as to how long I will need to wait for price to come back down to the open range, okay? Or to the pit open, okay? That's not the open range, that's a leg base, okay? The pit open. Yeah, we're right in that range. So we got about an hour and 25 minutes there. And we got about 50 minutes, 45, okay? So we're looking for turning points about an hour and 25 minutes into the session and about 45 minutes into the session. We're getting close, okay? Getting close. Then we'll look for the price to continue. Whoa! How about that? NASDAQ looking good too. And Meta reversed. Yes. All right. Look at it. These large market cap stocks dropping is getting us more and more confirmation. And we are expecting a V-shaped reversal off of the structure. Beautiful, beautiful. Did you get that one, Harvey? Harvey is one of our members of our team that's starting to, we got a prop account ready for him, and we're going to see how he does. He's been watching us for about a year now, doing all the trading, so he's a pretty good student of what we're doing. And he's the one that takes all those wonderful pictures that we use for our Mastering the Charts review and recap sessions. I always like to give him good pictures with big numbers on it. All right, time to be patient on this. Now, if you have not attended the Mastering the Charts Part 2, okay, that's where we get into a solid understanding of what these price patterns look like, okay? Well, all of you are pretty quiet. Let's hear some noise out there. You guys doing all right? Now, what we expect here at the prior sessions or at the low, okay, is a bounce. 78% of the time, price hitting a support or resistance area, price will bounce 3 out of 4 times, okay? Now, with the bounce, okay, and I'm just saying a bounce, if you see that price on your P&L and you like that, okay, and you don't want to sit through a bounce or give any of it back, then put it in your pocket, okay? And then watch how the rest of it plays out,
Order filled.
okay? We just got crude oil. Okay, so let's come back here, put a stop loss on crude, and I'm going to use that high. We're going to use a lucky number 77.77. Okay. 77.77. Okay. Now all of this move up was on very light volume. Okay. So we're going to look for a price to come back down to the origin of that move. And we see that the gap fill is way lower. Now we're taking this trade short against the higher time frame trend. Okay, so our first focus is looking at a 1-to-1 price move. Okay. So kind of our first target. And then the gap fill. 75.99. Okay. Now remember where the VWAP is at. That is also a good place to look for a profit. So we're leaning on, Apple's trying to recover a little bit. NVIDIA, okay, both of those are trying to recover just a little bit. They're getting a little bounce, but they're not in an uptrend. Okay, you have to make higher lows and higher highs for that. Okay, so we are getting that little bounce right around this support area. Okay, it's okay to take a profit, but you're going to miss it. So you will start to find out when you get through mastering the charts part 2, you're very comfortable with the chart patterns, okay? And you find the ones that resonate with you and your trading style, okay? Right. Into that, let's see, we have nat gas. Okay, good. Nat gas did pull back. 45-minute went right into the got a nice pullback, and now we're looking for price to bounce back up off of that 45-minute time frame. Okay. Now we're using that information, okay, our first pullback, using the time from when before the pit opened. okay, 2 hours before the pit opened. We've seen that this has been quite useful for us, okay? It does not always provide a trade opportunity, okay? But when we're looking for that valley, we want to time it, okay, 45 minutes in, and then we're looking for the peak over here, an hour and 25 minutes in, okay? Now, we gathered all of this just by observing the charts, okay? Looks like they're trying to catch their breath. Amazon in the lead down. Let's see. Yep, here comes Apple. Now, you may not get another chance to get in short, or it'll be a little aggressive short. Hi, Liz. Where you at today? Oh, you're back home already, huh? Good to have you. All right, looks like we're starting to get a little more support from our stocks. Come on, S&P. Yeah. All right, now it looks like we're about ready to break a overnight little support area. And we see the bank index is also another odds enhancer that we're using, BKX. We don't fight the banks, okay? We want to watch for when the small time frame trends start to establish, okay? But to remember, a trend is established, in a downtrend, we make lower highs, lower lows, and an uptrend, higher lows, higher highs, okay? So when we're looking at our charts, we have to remember what is the general momentum right now, okay? We had a drop, we had a small bounce up, okay? We made a lower high. We make a lower low on NVIDIA and Apple, okay? We're going to start to see this accelerate, okay? But don't lose sight, I mean, right now we're in the heat of the moment. We're in a great trade, okay? We need to keep in mind what is going on outside the price chart, okay? We need to also remember, how did we get to this good trade? Okay, what was the picture? How was the setup? Okay. Now, if you're new to what we're doing here at the Market Institution, we are using a forecasting or a forward-looking technique. We use a lot of price patterns that help us understand where the banks and institutions may have leftover unfilled orders. Okay. Now, one of the key things that I want to put out here, okay, one of the key things is our exchange traded funds, okay? Now, we have an exchange traded fund. We got the IWM, we got the Qs, okay? We have to learn more about the gaps, okay, and how they play. Now, I currently am, and I'm kind of thinking that we have a breakaway gap, and in order to identify a trend, we had 2 points identify it, 3 points confirm. When we have a break of a confirmed trend, we're looking for that bend at the end, okay? So a breakaway gap often retraces back into the gap area, okay? And inside that gap area, we look for a reverse leg base group of candles, You know, you may have to adjust the time frame up or down. Okay. Okay. And when you do some key areas like for the Russell, we'll be looking at each one of these little pivotal areas and adjusting the time frame down or up to find the reverse leg base. Now, with a breakaway gap, we often get that retracement back up into that area. Okay. So I'm getting a little more defensive as we get closer to the next place where we have economic reports, consumer sentiment. Now, this is last month's numbers, Christmas time. Okay. Not everybody was really comfortable going and spending a lot of money on Christmas. Okay. So we have to anticipate that those numbers may be a little off. Okay. Which are going to start to impact some of the retail numbers. Okay. So with that in mind and anticipating that, I'm going to take 1 micro off. Actually, our stocks have not shown any stock type of recovery yet. So I'll give this just a couple more minutes. Okay. All right, S&P, let's go out to the larger time frame. We're still looking for a prep screen zone. Okay. Now, once we get that, right now we're in this leg right here. Okay, as far as using that diagram, we're right here. Okay, and we're trying to put that low point in. From that low point, we're looking at a V-shaped reversal and price to rally back up. Later on, and possibly into next week, we would then be looking for price to come back down to these areas. Okay. What starts us off here is where we have that resistance. Okay. Qualified resistance. What is a qualified resistance? Okay. All right, breaking the Globex low. Traders are going to become a little more bearish. Wow, NASDAQ is deep into that zone. Now we're doing a NASDAQ trade at 3 micros. Okay. That's why it's important to understand, you know, when do we stay in a trade longer? How can we use that? Okay. Often it'll come right back to how we look at the exchange traded funds, how their gaps are set, whether we have a breakaway gap or a runaway gap. Okay. And what are our expectations here? Okay. Bank index is moving lower. You'll start to see how these correlate. Right now, in these market conditions, we have to keep searching for what's going to support our trade that we're staying in. Okay. Keep searching for it. Right now, the bank index moving lower does impact how the stocks are doing. Okay. If the bank index moves lower and we start to see a break of NVIDIA and Apple to the downside, making new lows, we're going to see an accelerated drop. Right now, price is not traded below this area, so we don't know how many we don't know how far it's going to drop. We're anticipating to that demand zone. Okay. And let's take a look over to the left-hand side. Okay, we're about ready to break that area. Yeah, it's still going to be choppy going down through that. Okay. I was looking and hoping there would be a nice pocket of points. Okay, Apple and NVIDIA still moving lower. Watch their percentages. NVIDIA down 3.6%, Apple down 2%. Okay. The reason I say watch those, just be aware of the certain percentages when they do go down, they stop. A lot of times with stocks, it's about a 5%, okay, or right around that area. With the markets dropping like this, we want to see if the banks and institutions are stepping in to buy. To do that, we come out and look at the trend. $TRIN, the short-term traders index. Okay. Right now, it's still showing that there's more downticks and down volume than upticks and up volume, and also more declining issues over advancing issues. Okay. Now, the markets are dropping. Okay. Markets are dropping. Okay. But the trend is also dropping. So that's not the right thing we want to see. If the trend is low, we want to see the markets going up. Okay. Time to go. And we're also seeing that the VIX is moving up and getting into that extreme volatility and fear area. 10 a.m. reversal is also on my mind. Thanks for bringing that up. Okay. Ten a.m. reversal, and we have an economic report coming out. Now, the reason we track economic reports and their impact on the market, and we always understand the dissemination of information, is that the reports that are being released today refer to last month or last week's information. Okay? Last month or last week's information. Not what's going on right now in the market. Okay? So kind of put yourself back in a month ago when the consumer sentiment report came out, or what you were feeling over a month ago. Okay, so if we're looking at the 10th of December, what are you guys thinking? Oh my gosh, we still have all the drama with the inauguration. We have Christmas, family, travel. What was that consumer sentiment like? Okay. And then you kind of get an idea for the direction. Now, as the stocks have not made a higher low yet, they're only getting a little bounce. Okay. We have not started an uptrend even on the 5-minute chart. Okay. If you're okay with the profits, it's okay to take it. Okay. I want to ride this thing out. Okay. You can, if you took multiple contracts, you can take a couple off and just see how it works out. Everything that we're doing here is to help you learn from this, not just provide you with trading ideas. Okay. Your learning experience is so much more powerful when you're making a profit. Okay. We do expect the volatility in about 2 minutes with that report coming out. Okay. How are we doing with crude? All right, crude oil doing good. Anybody take crude? Now, due to the wide Globex range, this was a bull trap area. Okay, that's why we participated in a counter trend trade using a 480-minute leg base group of candles. Also noticing how much up price is. Okay, 5%. Not a lot of folks are running in to buy right now unless they're covering a short position. Now gas, we've got a little bounce, but it looks like we're going to have to wait a little bit longer. Okay. Let's put a color on now. Woo, there we go. Banks still leading the way down. Oh, they're looking for buyers. Look how thin that volume is, okay? We really don't have anything in the way until we get down to our leg base zone, okay? NVIDIA, Apple still leading the way, Meta coming along with that, Tesla, Google, or sorry, Alphabet, Microsoft, they're all going in the same direction. Stocks move first. Exchange traded fund moves second. Yeah, that's why we have the zone marked on the exchange traded fund. Where's that demand area? Okay. Q's getting to 505. That's going to be my clue to look for price to bounce back out of that area. Okay. Boy, Harvey, are you in this at all? I don't know if we got you set up yet or not, but hey, we started off with some good tunes this morning. Oh my gosh, this is just 3 micros. Apple, nothing's making a bounce yet. In fact, I have to keep adjusting my chart so we can find them when they are. All right, so let's monitor the wow, this thing is going so fast. Thanks for that. Hi, Mick. Glad to see you. All right, so we got a little bounce right here, a little momentum. I want to keep a close eye on the Qs. We're getting right close to that demand zone. Okay. Now we still have a demand zone working out over here on the NQ. Okay. As soon as that Qs get down to that level, okay, I want to see what time it arrives there. If it arrives earlier than the quarter hour, okay, then I'm going to wait a little longer. Stocks move first, exchange traded fund moves second, futures adjust to those, okay? Futures are derivative instruments, and that's what a lot of people forget about, okay? Oh, look at that, we got a bounce right off on the Qs here, but it hit that zone earlier than the quarter hour, okay? So you can make a choice now. I'm looking at Apple and NVIDIA, and I'm choosing to stay. I'm seeing that Meta and Amazon, all of these are pulling back. Okay. They haven't gotten a big green candle yet to the upside. Oh, gosh. Why did I only trade the micros, huh? All right, S&P. Let's get the SPY out there. Yep, we're starting the candles are getting smaller as we're starting to approach a demand area. Banks continue lower. Banks are selling. The BKX is 24 national and regional banks under one ticker symbol here. Okay. And this helps us understand if the banks are buying or selling or money inflow into the market or outflow. if you have a way to watch money supply and use the BKX, that can be a nice little odds enhancer there. All right. One more push. Let's come down and find those buyers. The Qs did touch the proximal line of the demand zone earlier than the quarter hour. Okay. Often when that happens, price continues to go through the zone. Okay. We use a time element because we see that the floor traders and market makers, specialists, everybody that's human that's still working on the floor, has patterns that we can watch. And this is why we're struggling right now with the way that the markets are looking, because of the AI that's involved and because of the quantum computers that are also now trading. Okay. But the banks and institutions are still consistent here. Okay. Look at that. We're starting to go through on the Qs. We had a runaway gap, price consolidated sideways, gap down. Okay. So we're not trying to pick a bottom. We're just enjoying the ride. So if price arrives into our zone on the quarter hour, 7 minutes away from it, 6 minutes, okay? No, yeah, 7, 8, right now. If it arrives on time, I'm going to hit the reverse button, okay? We're still looking for this particular pattern to unfold. Just as we started off this morning, we had a little map, okay? And this is what we're going to look for on the way back up. I have the lowest risk at this point. I have an entry and a stop, and I expose the risk ahead of time. I want, in a perfect world, I want price to arrive on time, on the quarter hour. If it arrives early, we anticipate it to go through. How many of you guys doing a happy dance today? Hopefully, if you took money, great. We're just waiting for the bounce, okay? We're timing it. I mean, after all, the stocks are looking for buyers right now. And there's a lot of uncertainty going on in the marketplace. We're missing a lot of traders that were in California. Of course, all those movie stars that sold their homes and cash in are looking for an opportunity to buy. That's going to take years for them to recover from that. Also heard that the insurance companies canceled a lot of policies. I'm not laughing about that. I'm laughing about the comments over here. How you doing, Greg? Good to have you. If you're watching our YouTube stream live, please click the like and follow button, subscribe. I mean, it's not much, it doesn't cost anything to subscribe, but you'll be able to get a notification when we have our live trading room live stream. All right, still watching the time down here. We've got about 6 minutes as we're waiting for price to arrive down there. Okay. Now, I do want to come back out and, while we're waiting just a couple more minutes here. China's central bank suspended temporary purchase of treasury bonds for the first time in history. Okay. Now that's their bonds, not ours. Okay. Why would they do that? Okay. And we also have we started off as an inside day. Thank you. Uh, we started off as an inside day where we see breakout trades often fail. Okay. We look for gaps to fill. There's a lot of detailed information about what we cover and check in the pre-market. Okay. We also see that the news does impact the market. So as we're watching the news and following it, a lot of times they're going to give that wink, wink, nod, nod ahead of time. Okay. Everything's priced into the market ahead of time because we're using the left-hand side of the chart where banks and institutions have already left their footprint. Okay. It's Macy's near you closing. There's 66 stores closing for Macy. So what's that telling us about our retail numbers? What did that tell us or give us an insight of the consumer sentiment? Okay. Woo! I'm going to jump out at gold. That was a pretty good move.
Order filled.
What else we in? We have gold. We have crude oil. Come on, in queue. Almost there. And we did all of this, $1,500 on 3 micros. Man. We got 3 minutes. Are we ready to take it back up? Hmm. Apple's still going lower. Now it's getting tense. We got 2 minutes for price to hit down into that zone. Okay. But I'm already at my kind of peak of that euphoria, and I'm wanting to pocket those points. Notice the stocks over here, they're starting to slow down just a tad. Not in an uptrend, okay, by any stretch. It's going to take a little while to turn all those stocks back up. Price arrived at the demand zone earlier than the quarter hour, touched the proximal line, and then broke through it. Okay. Good little lesson, good things to follow along with and get a good idea of that. Okay. We're starting to base right here. We're not in a zone yet. Got 1 minute to the quarter hour. The other thing that I'll point out in our pre-market routine is, and when we start off as an inside day like that, that our better trades usually take place around 10:30, 11 a.m. Eastern, when the banks and institutions have completed their order flow. Right now, looks like they're getting ready to load up on the boat here. Quarter hour. getting a good little bounce. I'm going to pocket this, not just hit the reverse.
Order filled.
And let's take off. S&P is still waiting down there. That one is a beautiful one. But we're starting to get a bounce, okay? Now, getting a bounce on NVIDIA and Apple is just kind of like a relief rally. Monitor what the bank index is doing. If the bank index continue lower, then we might see another pop to the downside. Okay. I'm going to close this one and do a big Friday
Order filled.
happy dance.
Order filled. Order filled.
Beautiful. Happy dance. How many of you did a happy dance? We walked you right through it all. Beautiful. All right. So now is our time to wait. Okay. And I want to point out a couple of things here. Okay. I'm going to wait for price to get to the demand zone. Okay. Or we will have to see a fresh accumulation of orders build. Okay. See, we're not at a place where we can expect a reversal. Okay, at a zone. So we may have to wait for a fresh accumulation of orders to be built. Okay. Now, if you don't know what that fresh accumulation of orders looks like, let's just I think I have one chart that I'm working with here. Ooh, hold on. Yeah, Q's came back. 10-year Dow. Let's get rid of that one. Wow, beautiful drop. Russell breaking. We're getting a good bounce on the 30-year, 5 and 10-year. So that's an indication that we're getting close to a turning point. Okay. Taking an example here. This is what an accumulation of orders is. It's why we use support and resistance to identify the buy and sell territories. Okay. There's a lot of information on this. We did post these in the chat, but what we are looking for on this is to use that picture, an accumulation of sell orders, an accumulation of buy orders, okay? And in finding inside the sell territory or inside the buy territory where the leg base group of candles are at, okay? There's always some leftover unfilled orders, and we still got a 2-to-1 move away from this one, even though the session did jump back to the upside, okay? All right, where are we at? Let's come back out. S&P. All right, Gen Z. You're in DC now, huh? Are you guys setting up for another show? Or did they hire you for the inauguration? Yeah, I saw that picture you posted earlier. Looks like it's very cold out there. We got clear skies, all blue. It's cold. All right, we do not have a momentum trade back. We don't have an entry to go long yet, okay? So what we need to see down here is either the price hits a zone or a fresh accumulation of orders gets formed, okay? This is where you have to be willing to wait a little bit, okay? Chasing momentum trades is very high risk. It's fun, like to do it, but it is fun. Boy, Buffalo. Ooh, that's even worse. I think I've been to Buffalo a couple of times. A lot of farmland up there. Now, as we watch for that potential move back up. I mean, we just got this one down, okay, and we participated. As we're looking for the move back up, we need to see on a small time frame that these stocks make a move up and then make a higher low followed by a higher high, and then we will have our opportunity. Okay, everything else is going to be kind of like scalping at this point until you get your trend in place. One of the studies that we've been doing as well was looking how to merge into a larger time frame, okay, and getting that picture down. Starting off with like a daily or a weekly or a high time frame, you break it down and get all the areas of where you have your accumulation of buy orders or sell orders, okay? And then on a smaller time frame, we're looking for basically the same shapes, same patterns, okay? And we're looking to merge into it, either a breakout trade. Looks like this one pulling back a little bit, okay? There's a leg base down below. Now keep in mind, I'm not trading these, okay? The trade entry is at the breakout, okay? You must have the breakout above a resistance or below the support to make the buy and sell territory active. Okay, we do have NVIDIA in a demand, okay, so we should start expecting a little bit of a bounce. Alphabet's in a demand. Meta's in a demand. Microsoft at a support, okay, second test to this area. This was the first entry on Microsoft. Okay. So this is the pivot point. It's not a zone. Okay. So Microsoft at support, a place where we could see a bounce. Apple broke into that area where there's not much in the way till it gets down a little bit lower. Okay. So price moving back up to get supply. Okay. We also see that with Apple on a bigger time frame, the bounce, old resistance becomes new support. Okay. So we're getting close to expect a bounce on Apple, NVIDIA, Alphabet, Meta. Not so much Tesla right now. And Amazon, we could now look for price to go back up. And again, another price structure. Little lesson. As we teach in the Mastering the Charge Part 2, the structures are very important, okay? Using the support and seeing that we made a higher high before price broke that support area, okay? Price coming into what we refer to as a little trap, okay? When we make that higher high, price breaks down, this can show where price makes a higher high before price breaks out. We can see that price could rally back up, okay? So the sell territory now is active for Amazon. The leg base group of candles was not close to the breakout. Okay, it's farther away. This is another clue that we get the fake out breakout and then price rallies up. Okay. Now stocks take a lot longer to turn. Okay. Futures are much more flexible. But as we're using a large time frame, we have to understand that the reason the stocks dropped was to find buyers. Okay. As stocks are finding the buyers, and we're seeing that on the price chart now, where price is coming into demand areas, into buy territories, and so on. Okay. We need to anticipate a change in direction. Okay. So let's come back out to a small time frame on our tick chart. Nice little bounce. Okay, but no entry yet. We have just made our first low we need a pullback to make a higher low before these stocks start to trend up, okay? Wow, that went fast. We only took a couple of trades. Ooh, who's still in crude oil? Beautiful. Now, we do like to trade here at the market institution. Okay, we do like a lot of trading, but my hope is to teach and help you guys understand why things have happened. Okay, why did these things happen? Okay, what's on the price chart to the left-hand side of the chart that said it was okay to take the trade short or take the trade long? Okay, how do we stay in trades longer? Well, we start looking at how our exchange traded funds are doing. Okay. Now, if we classify these as breakaway gaps, okay, we have to anticipate the price going to come back up into the gap area and look for that reverse leg base group of candles. So if that is to play out, what would we need to see to participate? I'd need to see a price drop into demand, or I need to see a fresh accumulation of orders to splice in, merge in, or splice in, if you want to call it, to that move back up. Okay. So given that the morning session with the stocks, especially the NASDAQ stocks, have had a pretty significant move down percentage wise. Okay. It's going to take a little bit of time right now for them to change direction. But the challenge is banks and institutions will complete their order flow right around 11 a.m. Eastern. That's when they normally do it. Okay. And as they complete that order flow, we're going to be changing market participants. Okay. Now, what do I mean by that? Well, when we're using these structures and patterns, it's one strategy. Okay. Where we use supply and demand as that strategy. Okay. So structures and patterns and things like that, they help us with the timing of getting into the trade. Okay. But after 11 a.m. Eastern, so between 8 a.m. and 11 a.m. Eastern is when the banks and institutions complete most of their order flow. That's where that strategy, these techniques that we're covering right now, work best. Okay. That's where they work best. Other strategies, such as like retail patterns, cup and handle, pennant, flag, wedges, all the novice style of trading, okay? And the AI that comes into play, okay? And I want to keep AI and algorithms separate. There are two major algorithms that help the floor traders process orders, okay? There are algorithms to, they have a specific price from the guy upstairs who says, hey, I need you to buy or sell ABC stock, okay? Sends that order down to the floor traders to process the order. The floor traders then use the algorithms to process it, okay? The algorithms are different. The AI that comes into the market has often been very hard on the short-term intraday traders, okay? And it almost like anticipates where your squeeze point is at, okay? So a lot of novice traders, they like to take breakouts, they like to take chart patterns, so they give them the picture, okay? And then the picture has a lot of too much risk on it, okay? Now, I'm expressing this because I have been chopped up the last couple of days, okay? Actually, the last couple of weeks, in the latter part of the day when the AI is trading versus banks and institutions. I trade best with the banks and institutions because their footprint is easier and they tend to follow through. Okay. Learning to trade with the AI and now quantum computing, you got to think about how and what they're doing. Okay. We're competing against different participants in the marketplace now. So we're doing a lot of discovery of times of days when these different market participants come into play. Okay. All right. So as we're watching, I'm still waiting for a price to come into the demand zone. Okay. We're watching the stocks as we start to wrap up our session here. We're going to now look for either the stocks to make a higher low. Even on a 5-minute chart, we got to see the turn. If the stocks start coming back down to make a higher low, then we've got to anticipate that the futures are going to pull back. Okay. Meta got a really strong bounce back up. Okay. So as we are waiting for price to come down to our demand zone for an entry to go long, we have to anticipate price moving down. Now, very often we find a higher low where we use that 88.6% retracement. Okay. If I take a Fibonacci measurement from the low to where price is right now, it looks like price would break the low of the day just by a little bit. Okay. So I want to see where that 113 extension is lining up. We're expecting a V-shaped reversal from what we collected earlier. Okay. And with the V-shaped reversal, it should be pretty abrupt. I'm not sure why that's not coming up. There it is. So the 113 extension would put price down in our zone, a specific price about 20,055. Okay. Now, we're expecting this structure on a bigger time frame. Okay. Kind of like a map. As we are approaching a potential trade, we have another map in how to get into it. This is one of the structures we teach in Mastering the Charts Part 2. Okay, using Fibonacci extensions and retracements along with matching into a supply zone or demand zone. Okay, so A point here, A equals, if it is a 113 extension of the prior swing, X and Y, very often we get that move back up. Let's just do it this way. Which is an aggressive move back up. And the B point (161.8) or 224 extension of Y and A. Okay. Now it doesn't stop there because we're still, this pattern here that I'm drawing out is potentially happening right in here. Okay. So this is what I'm planning for. I don't have an uptrend until I build a fresh accumulation of orders or price makes a higher low. Okay, so we're not trying to chase this at the moment. We're not missing anything. Okay. The C point on this is very shallow retracement. And we look for that continued move back up. So this piece of information with our potential momentum reversal, okay, and let's just put the C point. Okay, and then we're looking for that to move back up. Now, where we're looking for that D point on this, okay, is going to be right back above our resistance. Okay, so that puts us as a trade opportunity here. If the momentum reversal comes into play, we would have a fantastic potential move back to the upside. Okay. This morning we waited for it. Okay. We saw the picture after a strong drop, and we got that V-shape reversal. Okay. That often plays out. Okay. And we started getting that. Now the picture's changing a little bit. I've got a hop. Okay. How many of you guys made money today? Type it in the chat, please. If you guys did a good trade on the equity indexes or crude oil or something, type it in the chat. How much money did you make? And hopefully you'll join us next week. We do every Friday. We do a live stream. If you want to be part of what we do during the week, we do have community rooms. We do have where we all trade together. Everybody has mic privileges. And we also have our live trading room. So we have kind of a blend. Okay. It's important that students have an opportunity to talk and ask questions as we participate in trade. Holy smokes, Greg. Wow. Beautiful job. Now, can you turn it off and walk away? Let me recheck that, Ro. I'll be over in the Discord room here shortly, and we can, I'll double check that. Okay. I think you're right, though. All right. Nice job, everybody. Have a great Friday. Okay. We'll see you next week. If you want to subscribe, please go out to our room. If you want to get notified when we're doing the live streams, please make sure you register on our website so we can get you those notices. Have a great trading day, everybody. And thanks, Harvey. Good job, and team. And Mr. B and Stephanie. You guys make some trades today? I heard the order filled a couple of times. All right. Everybody have a wonderful Friday. Great weekend. We'll see you Monday. Bye now.